charts are the charts. In fact, I've been able to use them to make a lot of great calls in crypto. So I do believe it still works perfectly for cryptocurrencies. But I do think that we are in a world that's ever increasing in speed, right? So I still remember back, in the 90s, you still had to call your broker to place a trade. It took time. They had to put it in. Heck, before that, they had to do a ticket and then run it over, or you had the ticker tape, right? The tape going by. That's where we get the tape on stocks from the ticker tapes, right? So again, right. As we advance, we get faster and faster. We're now in a world where speed is so quick. Things spread on Twitter so quickly. Look at the banks that have failed, how quickly deposits were pulled out because of social media and the word spreading. So I think that's the key, is everything is speeding up. But at the same time, what that does, and this is amazing for the technicals, is that creates more fear and emotion, more greed and fear, because it spreads faster. And therefore, that gives us as technical, level-headed, kind of disciplined traders, believe it or not, it gives us more advantage. It gives us more opportunities to take advantage of these kind of mispriced situations.
Bitcoin price continues to fall, dragging the broader crypto market down with it. BTC is down 4.52% in the last 24 hours, while ETH is down 4.10%. With a current price of $26,289, Bitcoin records its lowest value since March 14th this year, when the price dipped as low as $26,544. As always, the reasons for the deep pullback of the Bitcoin price are complex. Remarkably, there was actually good news on Wednesday, May 10th, as the CPI continued to fall, causing the Bitcoin price to rise as high as $28,317. However, then fake news about an alleged sale of 9,800 BTC by the US government shook the market. The Bitcoin price flash crashed as a result and has seemingly not been able to recover since. But this narrative is only half the story. Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing, Gareth Soloway updates about why he is shorting Bitcoins in the current market standing and what his outlook for Bitcoin in 2023.
Yeah, so as I've gotten older, I've gone to the more of the short term more and more here. And then the reason is because the longer term, all right, so as a technician, when you're analyzing a chart, you can generally say, okay, this monthly chart, which will give me the viewpoint of the charts over the next 2 or 3 years, that is a harder analysis point to get right. Meaning the further out you go on the spectrum, on the timeline, the harder it is. There's more possibilities of things that can change over time and throw curveballs into your analysis. The shorter you keep your analysis, the less likely you'll have these curveballs throw in. So while I do look at the bigger macro picture, my trading has become shorter term. And I always say this to people is like, when they say, well, don't you believe in Bitcoin long term? Why don't you just buy and just hold it for the next 20 years? Well, I do believe in Bitcoin. I do think it's going much, much higher. But when you see it at 69,000 and you see that it's going to drop to 20,000, why wouldn't you exit there and then use that 69,000 money to buy so much more at 20,000? So by trading short term, I'm actually able to maximize profits 10, 15, 100 times more than buy and hold investors. So I'm much more cued into the short term these days, and it's much more profitable.
Binance, the world's largest cryptocurrency exchange by trading volume, announced on Friday that it is proactively withdrawing from the Canadian market. The company thanked the regulators who worked with them and said that the Canadian market was small. Unfortunately, new guidance related to stablecoins and investor limits provided to crypto exchanges makes the Canada market no longer tenable for Binance at this time. We put off this decision as long as we could to explore other reasonable avenues to protect our Canadian users, but it has become apparent that there are none.
I've had in my early years of trading, there was a situation where I had just gotten my account up to 100,000 and I thought I was king of the world, and then in one day I did the wrong things and I didn't abide by rules, and I got into a position and I lost 70% of that account, 70,000 gone in one day. And it is extremely humbling. I've become, because I've been humbled so many times by the market, it makes me always look over my shoulder in the technical speak of being very cautious with my investments. Is even though I'm right so much, I still always expect to be wrong. I think the other thing is too, it translates into my life. I've been humbled by the market and almost gone broke so many times in my early career that even when I buy a house or even when I buy a car, I like to pay off that note ASAP as fast as possible when I have the money, because I remember the feeling of losing everything. And I just, in my head, I'm saying, well, there's anything could happen tomorrow. Life is not a given, right? We have to live for today, but at the same time, we have to save for tomorrow. And you might be in a scenario where something could change tomorrow. And I don't want to have these bills hanging over my head. So pay it off, get it done, and just live as if that next trade could go against you. Always be cautious in the markets.
On daily timeframes, concerns among market participants thus focused on whether the pair would now stay lower after 3 local tops. This head and shoulders pattern, now clearly visible on the chart, would create a negative precedent should it confirm. We simply cannot let the hash Bitcoin head and shoulders crowd win, financial commentator TED Talks Macro insisted. Back above $27K things will get very interesting.
Yeah, so emotion is part of trading, but it needs to be taken away from trading to be level-headed and do the right thing. So, for instance, the biggest thing to control emotion is position size. All right, if someone comes to me and says, hey, I want to invest X amount of dollars in a stock or a cryptocurrency, I'm going to say, okay, to you, if you invest that and this stock or crypto goes 10% against you, are you going to get emotional? If the answer is yes, then it's too much. It's too big of a position. So make sure that when people invest, you have to invest the proper amount, that if I were to strap you with a heart rate monitor and you were in that trade, if it goes against you, your heart rate should not budge 1 inch. It should not change at all. And that will tell you that it's the right position size. You need to essentially be robotic. You want to have no emotions, purely ruled by logic, charts, discipline, and that's the way to succeed, right? And again, this is something that we don't find in everyday traders. Most investors and traders, they're going to go into a trade, they're going to say, hey, listen, I want to make $1 million overnight, which again, it may work once or twice, and then they lose it all. You have to start with the basics. You have to do it the right way. I tell you, the one thing I learned in my trading career is that when I started trading the right way, proper position size, only following the technicals, keeping myself disciplined, that's when I actually started making significant amounts of money. And it's very counterintuitive. Most people would say, oh, well, you have to put a lot of money in a trade to make a lot of money. But the bottom line is I made so much more by being disciplined, keeping position sizes small, because I didn't blow my account up. And ultimately, it's like a savings account, letting that interest just continue to compound. When your gains compound, before you know it, you're trading a 2-3 times X account over the course of years, and your gains will naturally compound as well.
So what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.